Live from London, this is Bloomberg Daybreak Europe. I'm Bonnie Quinn with your top stories. Oil slides as President Trump says he's looking at a range of options to tame crude prices. The war's seventh day sees Iran ramping up actions on neighbouring countries. The US grants India a temporary waiver to buy more Russian oil, easing pressure on one of the world's most important importers. Plus, the US president reportedly says there are no plans for boots on the ground in Iran, but demands a complete overhaul of the country's leadership structure. So let's have a look at these markets as they weigh headline after headline in this war, along with a bunch of other headlines too, and look ahead to jobs data out of the United States today. As you can see, Brent crude came off a little bit yesterday, but we did make that $85 a barrel mark, and WTI is above $80 a barrel. So that's a huge move in 1 week for both of those contracts, right? Now, we are coming off a little bit today on some of the president's comments, but again, no huge detail. One of the options the president is looking at is having the US Treasury trade in the oil market. Nobody seems to know how that might work. The 10-year yield up another 2 basis points. That's a 22 basis point move this week. We're still in that range between 375 and 425. Nonetheless, it is pretty eye-opening. And then let's take a look at futures, because obviously we saw a bit of a round trip yesterday. S&P futures are pointed higher for right now, although as we've seen, sometimes the very early going does not indicate what actually happens at the open. Gold continues to be a safe haven, although we're very much off our highs. And I wanted to point to the VIX because big increase in the VIX yesterday, still below 24. Nonetheless, it does show that irritation and maybe a little bit of fragility are under the surface. As Israeli strikes hit Tehran this morning, the IDF says they're moving to the, quote, next phase of dismantling the regime, while Iran launches a fresh wave of missiles across the Gulf. Bahrain's oil refinery was hit and set on fire, and there were reports of explosions near Abu Dhabi's international airport. For more, Bloomberg's Jumana Bersechi joins me now from Dubai. Jumana, what can you tell us? What's the latest?
Yeah, well, the latest is there doesn't appear to be any signs of things letting up at all. Operations continue to intensify. These are the joint U.S.-Israeli operations, and the Central Command also saying that they've hit 200 targets in Iran over the course of the last 72 hours alone. U.S. Defense Secretary Pete Hegseth saying that the firepower over Iran is about to surge dramatically. And indeed, the Chief of Staff of the IDF has said that they have also managed to eliminate or neutralize about 60% of the Iranian missile launchers. So the expectation is that these operations will increase in intensity over the coming days. For Iran's part, interestingly enough, our colleagues in Israel were reporting that actually it was a relatively calm night as far as projectiles being fired into Israel, but the Gulf states continue to bear the brunt of the projectiles coming through from Iran. I will tell you just anecdotally, over here in the UAE, many of us received missile alerts around 9 p.m. in the evening yesterday. More missiles, drones being intercepted. Also yesterday afternoon, the refinery in Bahrain was hit by a drone as well. They say that it caused limited damage. And then further drones intercepted this morning in Saudi Arabia, and more drones once again being targeted at that Qatari Al Udeid base. So really, no signs now of things beginning to let up at all. And I will just point out, because the other major front that's opening up right now is also in Lebanon. Hezbollah fired more rockets into the northern part of Israel. And on the back of that, yesterday, the IDF warned citizens of the south and also in the southern part of Beirut to evacuate in anticipation of an aggressive aerial bombing campaign. We're hearing of strikes that have transpired throughout the course of the night. But again, to recap what our colleagues in the Israel Bureau were saying, this is becoming perhaps a more active front for Israel than the Iranian front is at this point in time, because of the deployment of troops on the ground in southern Lebanon as well.
And then, Jumana, President Trump said he wants Iran's leadership structure fully removed. How is that being received, and where are we on succession?
Well, President Trump has said quite a few things about the willingness to negotiate with new leaders in Iran, but he also has referenced that they had a couple of names in mind, but that those people keep getting killed by the operations. So I think the suggestion here is that he would be willing to talk to new leadership so long as they are more compliant. And I guess this raises the question here of whether one of the objectives is regime change or whether they're looking for regime, quote unquote, compliance. Now, at the same time, the Iranians are in the process of looking for a successor for the supreme leader. We've spoken through the procedural work that is going through at the moment. There is this meeting taking place, the so-called Assembly of Clerics. They get together, there are 88 of them, and they should be deciding who the successor is. One of the names, the front runners, is actually the son of the prior supreme leader, and his name is Mujtaba Khamenei. The question that people are raising is how different he's going to be actually from his father. He is quite literally cut from the same cloth. He is being put forward aggressively by the Revolutionary Guard Corps, has some very hardline positions when it comes to theology and also on foreign policy. And so if this individual is selected, it's unlikely at all to change the status quo.
All right, Jumana, we will wait for a name. That's Bloomberg's Jumana Bersachi in Dubai. Oil lower today as the U.S. announces it's weighing a range of options to address the spike in oil and gas prices amid the war in Iran. I'm joined now by Bloomberg Asia energy reporter Stephen Stepchinsky. Stephen, what options does President Trump have to try and tame oil prices?
You know, there are a number of different levers that he could try. There's one which is insurance. He could try to provide some sort of insurance guarantees for ships to go through the Strait of Hormuz. That's been one issue. Why we've seen essentially a collapse in traffic against that key waterway, which is about 1/5 of global oil supply goes through. Another thing that you could try as well is providing naval escorts. That is something that would help with the security issues, right? It's not just insurance. Insurance prices have been rising. That's expensive for ships, but also ship owners, especially ones that are in Asia, like the Japanese, as well as even the Chinese, have asked their ships to stop going through the strait because they're a bit worried, honestly, about potentially getting hit by anybody, really. I mean, there have been a few moments over the last few weeks where ships have been targeted. There have been explosions. So there is that ongoing risk existing there. So some sort of naval guarantee as well. Another lever is a coordinated release of oil reserves. The U.S. has a strategic oil reserve that they could potentially tap if there gets to that level as well. The Japanese and other countries do. There are Japanese refiners who are trying to push their government to consider tapping their reserves. But one thing that the Trump administration did over the last 24 hours is they provided a waiver for Indian buyers to buy Russian oil that's already on the water. It's a 1-month waiver for them to buy up that supply. It's kind of, think of that as like a floating storage, right? They're already on the water. They're there soaking it up. The administration said that this was a temporary measure to help ease the supply situation in India specifically because India does rely quite heavily on the Middle East for oil that goes through the Strait of Hormuz. So that's something that's positive for them and, you know, theoretically could tame the prices slightly, although analysts have said that ultimately won't have that large of an impact because it is still, again, a temporary measure. That all being said, you step back and you look at the situation. Anything that the Trump administration does, it has to be more than lip service. It has to be actual action. So if we're looking at insurance, naval guarantees, releasing the strategic reserves, I think the market is actually waiting for something to happen before we start pricing it in and seeing prices fall further.
Yeah, Stephen, thank you so much. Bloomberg Asia energy reporter Stephen Stepchinsky. Asian stocks are trading higher this morning, but the regional benchmark is still set for its worst week in 6 years. Let's see how Asian markets are actually faring now with Winnie Su in Hong Kong. Winnie.
Yeah, morning, Bonnie. We are finally seeing a bit of stabilization in the Asian markets, especially after that roller coaster week so far. And as you mentioned, we are still looking at Asian stocks down about 6% so far this week versus the S&P down less than 1%. Now, leading gains today, interestingly, are some of the tech stocks in Hong Kong. We've got that better than expected results from JD.com, lifting overall sentiment, but also we're closely watching for that economic briefing briefing coming in less than an hour. Now, flip the board. I just want to take you to this chart showing how we're still seeing lots of vulnerability when it comes to Asia. You're looking at a overall weekly outflows, and Asia ex-China here down about $11 billion of outflows that we're seeing this week, and leading the outflows are Taiwanese stocks, seeing actually its record weekly outflow. So it really brings into the question if we've reached that inflection point of that sell America and buy Asia trade. Now, flip the board and take a look at some of the sectorial moves when it comes to some of the other tech names. Interestingly, we are seeing that tech and chip stocks here under some pressure. We've got that Bloomberg scoop that the U.S. is considering requesting companies to seek approval for their AI chip exports. But we've also got another report saying that ChatGPT, OpenAI is scaling back ChatGPT's shopping plans, and that is really lifting the software names here and driving the rotation away from hardware names. Back to you, Bonnie.
Winnie, thank you so much. Winnie Su there in Hong Kong. Traditional safe havens, treasuries, the yen, the Swiss franc, gold, they've all offered investors pretty much no refuge this week. Let's bring in Mark Cudmore, Bloomberg's executive editor for Asia markets. Mark, obviously the dollar is the exception. Its best week since the election, in fact, right?
Absolutely. The dollar is doing very well. And that is exactly as you would expect. The dollar is the ultimate haven from an energy shock that comes out of the Middle East. We wrote a piece last Sunday that treasuries would not work as a haven because it is going to be an inflation shock. So, of course, yields will go higher, treasuries won't work. In an environment where you're getting an energy shock, the US is energy independent, it's an energy exporter, and it's generally much more insulated from Middle East trade. So ultimately, in this kind of crisis, dollar is the absolute haven. And so it's kind of played out this week exactly as you'd expect. When it comes to gold, one of the reasons people have been buying it is on those geopolitical concerns. But now we've had a full-on war in the Middle East, a multi-nation war involving the US to a much higher level than people want. So you've already played through that trade. So if you bought gold for geopolitical reasons, well, then pat yourself on the back and you probably want to get out of that trade, because what's going to be escalation from here? You've got to have some pretty extreme thoughts if you think there's going to be war escalation from this point here. And then you've got to remember that for gold, we're going to get a stronger dollar because that's the haven for this kind of energy crisis. You're going to get higher yields because we've got an inflation shock, and those things at the margin are bad for gold. Of course, the yen will never be a haven in such a crisis because it's a major energy importer. So essentially, dollar is the ultimate haven for a Middle East energy shock. And this week has panned out exactly as kind of anticipated.
Well, typically we don't see much movement on a jobs day. Obviously, it's a different kind of jobs day. But what are you expecting from the jobs print due out later today?
Bloomberg Economics expect a weaker number than the consensus forecast. They're the economics experts. I'm not going to quibble with what they project. I do note that the jobs market continues to kind of hold up much better than the whisper fears that have you think. And while I think that AI is absolutely going to have a major impact on the jobs market, people may be rushing to be too quick to expect that impact come through too soon. I do think really, though, that whatever happens on jobs will be very quickly kind of dominated by whatever happens in the next development on the Strait of Hormuz around the Iran conflict. So, I think that absolutely we'll trade the jobs data in the short term today. But, before the Friday close, it'll be completely forgotten unless it's a real shock, and we'll be focused on the Middle East conflict instead.
All right, the survey number is saying 55,000 jobs created and the unemployment rate staying at 4.3%. Mark Cudmore, Bloomberg Markets Live executive editor, thank you. Still ahead, the US considers restricting AI chip sales abroad without explicit permission from Washington. More on our Bloomberg Scoop later on. But first, Negah, Angha, former senior advisor at the US Department of State, tells us why the Iran war has moved to another phase. That's next. This is Bloomberg. A barrage of Iranian missiles and drones has targeted at least 5 countries across the Middle East, prompting several governments to urge their citizens to take shelter. This as Israel carried out a 12th wave of airstrikes on Tehran in a war that Iran says has already killed more than 1,200 people. Iran's foreign minister spoke to NBC.
Our soldiers are prepared for any scenario. When I said we are waiting for them, it didn't mean that we are waiting for continuation of the war. No. But we have prepared ourselves to confront with any scenario, with any eventuality, any possibility, and we know that we can handle that.
I'm joined now by Negah, Angha, visiting fellow at King's College London and former US State Department advisor under the Biden administration. When we hear the comments there, does it appear to you that this war is going according to plan, for Iran at least, given that it seems it might have been a little bit surprised on Saturday?
Indeed. Good morning, and thanks for having me on. Look, I think we're at a very critical moment in this conflict. It's taking a new form, a new shape. I think over the next few days, I think we will learn a little bit more about the trajectory that it will take, whether this is going to be a much shorter sort of conflict and we'll have all parties coming to the table to negotiate something, or if this is going to be a long continued, potentially leading to a civil war-like situation inside Iran.
Are you surprised we don't have a successor named yet? Does it indicate that there's a vacuum in leadership?
I'm not surprised, to be quite frank. I think there is a lot of infighting that may be happening within the IRGC ranks. I think they are the ones who really control the situation, and whatever the named supreme leader will look like will be sort of that civilian face of the operation. Obviously, we've been hearing a lot of rumors about Khamenei's son being a potential successor. President Trump coming out last night saying he's going to have to approve whatever that, naming of the supreme leader, the naming of the next sort of leader of Iran will look like. I think, there's 2 reasons why we're not hearing anything. One, in terms of safety, they could essentially be assassinated like Ali Khamenei. But the second reason is also making sure that they are able to achieve the right sort of civilian face for the IRGC.
Those comments from Trump, his claim that he can have an input on a successor, is that just a pipe dream? Is there a way that might actually work?
It was quite the statement. I think it caught everyone by surprise. But he is really looking, and he's repeated this multiple times, he is looking at a Venezuela model. I think very similar to what happened in Venezuela is what he's seeking for Iran. 2 different countries, 2 very different geopolitical situations. But that is, I think, the intent behind his comments.
Militarily and strategically, what are the Trump administration's choices from here?
He's in a bit of a difficult bind, which is why I think the next few days will be very, very important. One, how long does he want to continue these kinetic actions? Because at the end of the day, the U.S. public is not very happy with potentially leading into another forever war. He will need an off-ramp. That off-ramp could look like negotiations. That off-ramp could essentially declaring a quick win if a successor is named, and it's something that the United States is willing to work with. I think the concern right now is not only having a lot of these separatist groups coming into Iran, or the various different indigenous populations inside Iran sort of creating some sort of uprising. But secondly, it's also the Gulf states. Right now, the Gulf states have essentially kept their powder dry. They, have been incurring the brunt of the attacks from Iran, with attacks on their civilian infrastructures and rockets over their skies. But there's only so long and so far that they can essentially not react to these various attacks by Iran. If they get in on the game, then I think this will be a very long, prolonged effort.
If this particular regime survives, do you see any future where there are negotiations with this regime?
I think there could be a window of opportunity. I think there's always a window of opportunity for diplomacy. There's ways of making it palatable for all populations and audiences. There is room for it. I think there is still room for it. And I think that is why you see the UK, France, other allies, key allies of the United States, essentially not wanting to get actively involved in this conflict in order to allow for diplomacy to have room. They can be the interlocutors between parties.
When we talk of regime change, are there people that are ready to go? Are there groups that are ready to start leading a country of 90 plus million people? And when President Trump says he has a name in mind, who on earth could that be?
Well, I think that's the part that it's the open-ended question, right? Inside Iran, you have a series of names, but they are essentially linked to the IRGC in some way. So there could be one option is him wanting to find an interlocutor within the apparatus right now, similar to the Venezuela model. The second piece could be somebody from the outside, some representative from the outside. The name that's been floated quite a bit is the former Shah's son, Reza Pahlavi. But even then, President Trump hasn't expressed his full support behind a representative coming from outside of Iran.
I just want to point to the fact that we are showing live pictures of Beirut right now. This is Beirut at this time in the city with those plumes of smoke emanating from several areas of the city. So, I mean, Pahlavi, yes, has put himself forward as a potential, person that could lead the country. But do you imagine that somebody could come in from outside and actually garner the loyalty of a civilian population that are very divided, I imagine, as well as the IRGC?
I think that is the core issue. The core issue right now is, will the security factions put their arms down and support a new apparatus? I think they are the core audience to win over. Because what we forget when we're outside of Iran is that you do have a very large population that either financially or morally support the IRGC and the Islamic Republic. And those are the entities, those are the people that you're going to have to win over as well. I do think because Iran is not a monolithic society, because it has various different cultures, there's something about the nostalgia of the former monarchy that intrigues them, that they're willing to support. They're hoping for a change. He would be a transitional leader. It would not be the leader of the country, but he does have enough support. But again, my biggest concern is the security factions. If they don't put down their arms, if they don't want to change, I don't think you'll have a successful transition.
Negah, Angha, please do come back again and tell us more. Fascinating conversation with a visiting fellow at King's College London and former US State Department advisor Negah, Angha. Coming up, Donald Trump fires Kristi Noem after a controversial tenure in charge of US Homeland Security. More of that next. This is Bloomberg. Now to all the top stories we're following this morning. The number of cancelled flights to Middle East hubs has topped 27,000 since the war in Iran began, even as carriers look to resume some operations. Thousands of passengers have been stranded in the region, forcing many to take expensive routes to reach functioning airports in Saudi Arabia and Oman. The US and Venezuela have agreed to re-establish diplomatic relations after the ousting of Nicolas Maduro. The State Department says it aims to promote stability, economic recovery and political reconciliation. Interim President Delcy Rodriguez has struck a far more conciliatory tone towards the US than her predecessor. President Trump has removed Kristi Noem as Homeland Security Secretary after months of controversy. She's the first cabinet member dumped during his second term. Noem faced bipartisan rebukes during congressional hearings following a federal immigration crackdown in Minneapolis that saw agents kill 2 citizens. Coming up, oil and gas disruptions in the Middle East continue to shake global markets. We'll be speaking with Livia Gallarati. She's head of global gas at Energy Aspects. That conversation coming up next. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Vonnie Quinn with your top stories. Oil slides as President Trump says he's looking at a range of options to tame crude prices. The war's seventh day sees Iran ramping up attacks on neighbouring countries. The US grants India a temporary waiver to buy more Russian oil, easing pressure on one of the world's biggest importers. Plus, the US president reportedly says there are no plans for boots on the ground in Iran, but demands a complete overhaul of the country's leadership structure. So let's take a look at these markets then. We are seeing, red on the screen in terms of oil, but we're up there. We're above $85 a barrel for Brent, and we're almost at $81 a barrel now for WTI. We're seeing a massive increase this week in yields, 24 basis points at this point, at 4.1421 on the 10-year yield. And of course, then when it comes to futures, we are seeing that the S&P 500 has green on the screen. It's pointed to higher futures after a very down session yesterday. So a little improvement overnight after this volatile week. And thankfully, the market seems to be taking a little solace in President Trump's comments. We're also seeing European futures pointed to a nice gain there. But then you see gold. It's rising once again. And that VIX index did end the session yesterday just below 24. So quite the rise for the VIX there. The options include things like releasing crude from the SPR, waivers of fuel blending requirements, and even the US Treasury trading oil futures. It's not quite clear exactly how it would all work. Time now for your front page news, dominated by the Middle East. The Financial Times leads on Gulf states potentially reviewing overseas investments to ease strains caused by the Iran war. 3 leading Middle East economists consider options as the US-Israeli campaign against Tehran continues. The Wall Street Journal splashes that the UAE is exploring freezing Iranian assets to punish Tehran for attacks. Any crackdown on Iran's shadow financing networks in the Gulf state would strangle Tehran's access to foreign currency and global trade. And finally, Les Echos leads on SCAF but better. In Bavaria, Airbus and the IG Metall Union demonstrate together for a 100% German fighter jet. The wait-and-see attitude of Paris and Berlin causing increasing irritation across the Rhine. German employees and Airbus management joined forces to put pressure on Berlin. And you can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, terminal subscribers can go to DayBgo. So oil then, heading for the biggest weekly surge since 2022 as the war in Iran ripples through global energy markets. With the Strait of Hormuz practically closed, Persian Gulf producers continue to reel from the impact. With me now is Livia Gallarati, head of global gas at Energy Aspects. Thanks for joining. President Trump coming out saying he has a range of options to try and cap the price of oil. Livia, did any of them seem doable to you, including the US Treasury trading in the oil market somehow?
Yeah, there is very little detail on that one specifically. It seems a bit far-fetched, to be honest. Some of the other things that have been mentioned over the past couple of days range from U.S. backing insurance for vessels, even arranging military escorts, for instance, releasing SPR, you've mentioned that earlier. All of these are options that are being discussed. At the moment, none of them seem strong enough to appease the market in terms of actually providing a solution to the current crisis.
Is there any scenario where a shipper would let its crew and its vessel through the Strait of Hormuz, even if there were to be a U.S. escort?
Well, we've been talking with ship owners, captains that are on either side of the Strait of Hormuz in the last couple of days. And for now, we haven't gotten any type of indication from really anybody who would take that option, to be honest.
Trump signing the waiver to allow India take in Russian oil. That'll get, some 11 million barrels or something off the seas that are currently idling on tankers. But that doesn't sound very much when we know 18 million barrels a day goes through the Strait of Hormuz in normal times.
Yeah, look, India had been reducing imports from Russia over the last few months because of the U.S. sanctions. Now that they're losing large quantities from the Middle East, of course, they are looking at some of the oil and water from Russia as an option. But it is a short-term fix. As you say, the volumes in comparison are very small. It will help a little bit. It probably means Indian refineries in the very near term may not face as big of run cuts as some of the other Asian refiners.
European natural gas is up more than 50% this week. What is that pricing in?
It's probably pricing in a prolonged disruption to Qatari LNG exports. That's really the big ticket item for markets right now on the gas side. Qatar LNG, which roughly accounts for 20% of global LNG supply, has interrupted operations for about a week now. We understand it's a full shutdown at the moment, which means just to bring back liquefaction, it will take 2 weeks. And that will probably only happen after Hormuz traffic resumes, which we at Energy Aspects don't think it's going to happen before mid-March, to be honest.
Mid-March, wow. The market seems to be assessing this as less critical than the Russia-Ukraine war. Is that an accurate assessment?
I think for now, yes, assuming it's not a prolonged disruption beyond sort of our base case of mid-March. Should that change, which is still very possible, the situation is extremely volatile, so we don't really know what's going to happen, prices could rally further.
How much can economies switch to coal, and when would they make those kinds of decisions? How long would it take, and how much disruption would it cause, overall?
We're seeing that happening at the margin already, both in Asia and Europe. The ability to switch, particularly in Europe, is very limited, so it's not going to in any way offset the lack of Qatari LNG inflows. Some Asian countries are doing that, for sure, Southeast Asia, even China, Japan. What the Asian importers in particular, which are most exposed to the loss of Qatari volumes, are doing is looking at spot supplies from other Pacific sources. They are looking at U.S. Exports in particular. One of the most interesting things we've seen in the last couple of days is the diversion of U.S. exports away from the Atlantic Basin and into Asia instead.
Livia, we think of industrial and residential use, and they come forefront to mind, but there's also agricultural impacts here. At what point does the food supply get threatened?
That's an excellent question. I think it's a bit early days to say that. When it comes to markets, you're right, residential uses will be prioritized. You're seeing that happening in Asia for sure, and there's maybe curtailment on the industrial side. One of the sectors that typically would be the most price sensitive in Asia is the fertilizer sector in India, but because of government policy that provides subsidies, actually at the moment that's fine.
Okay, well that's at least a silver lining in the whole thing. When prices go higher, there's usually some demand destruction, but is there the ability for countries to cut back in any part of the world?
We are seeing demand destruction, as you say, particularly in some industrial use cases. What Asian countries in particular are doing at the moment is drawing on LNG inventories. And the good thing is that heading into the end of the winter, they actually had a pretty healthy buffer. So that means they can withstand the lack of Qatari volumes for at least a couple of weeks. Should the crisis be protracted, of course, it's another question. I
mean, we're literally counting the days here, right, Livia?
Yeah.
Unbelievable. Livia, thank you so much. Livia Gallarati, Head of Global Gas at Energy Aspects, joining us. Iran launched a fresh wave of missile and drone strikes across the Gulf overnight, targeting at least 5 countries across the Middle East. Under fresh attack from Israel this morning, Iran has increasingly relied on drones in its retaliatory assaults over the past few days. President Trump, meanwhile, says the U.S. has destroyed Iran's naval fleet.
Their Navy is gone. 24 ships in 3 days. That's a lot of ships. Their anti-aircraft weapons are gone. So they have no air force. They have no air defense. All of their airplanes are gone. Their communications are gone. Missiles are gone. Launches are gone. About 60% and 64% respectively.
I'm joined now by Becca Wasser, defense lead for Bloomberg Economics. Becca, do we know how much of that is true? Is it possible to know?
Well, at this point in time, no one actually knows. It's very difficult to do battle damage assessment in the fog and friction of war. That being said, we have updated numbers from U.S. Central Command where they say that the United States has taken out about 90% of Iran's missile capability, about 80% of their drone attack ability, and increased the number of warships that have been sunk to 30. However, that doesn't mean that the threat has dissipated. I think we've seen continued attacks, particularly on the Gulf, largely from drones. I think we're going to continue to see Iran strike back in whatever means it has possible. So all of that is to say that, yes, there are great statistics coming out of the Defense Department at the moment about what they believe has been diminished in Iran, but that doesn't necessarily mean that Iran's capability to strike back is fully degraded.
Yeah, there's a theory out there that Iran slow-walked the beginning of this war in order to degrade some of the capabilities of countries around it, right? Is that gaining traction? Could that be true?
There are a number of different strategies that Iran could have. If you look at the rate of missile fire and you look at the rate of drone attacks, you do see, for example, against the UAE, this big wave, almost over 500 drones in the first day alone. But since then, it has slowly dissipated, particularly on the missiles, as the U.S. has taken out some of their ability to launch missiles. So I think you are seeing this sort of trend where, yes, you could see that maybe Iran is holding back some capabilities in order to be able to respond further in the conflict. But, you know, there's also the chance that they are being heavily attrited of their capabilities and they don't really have that much to be able to bring to bear. You've also seen them take the approach of trying to regionalize the conflict, which is trying to bring in the Gulf states, and to a lesser extent, we're starting to see some involvement from some European countries as they scramble to protect their assets and bases located elsewhere in the Middle East.
Yeah, and I mean, NATO making comments now too. Do we see NATO getting involved, and Canada as well, saying, you know, I mean, Mark Carney really did a 90-degree turn there and said that they would have no problem getting involved, but it would be a defensive stance. How would that even work? Why would they need to get involved in a defensive way?
Well, I do think that we're not necessarily going to see NATO become a party to this conflict, but what we could see are individual NATO members get involved. And part of this is for defensive reasons. If you look across the region, the UK and France in particular have a number of military assets located at different bases, including in some cases co-located with US forces at bases in the Gulf and elsewhere in the Middle East. So we've seen the UK already, respond in order to defend some of their assets, including in places like Jordan, Cyprus, as well as Qatar. We've also seen France do something very similar. So we might see their involvement in these one-offs and in these purely defensive means, but I don't think we're necessarily going to see NATO as a whole join into the conflict, at least not at this juncture in time. As things go on, we could see that shift, but right now I think it's going to be one-offs.
Becca, if this does continue for a bit longer, Washington is going to have to move to maybe less expensive but shorter range missiles, right, and more targeted strikes and so on. It says it has air superiority. Does it? Because for something like that, you really apparently need complete air superiority.
That's such a great question. I think that is exactly right. The United States does not have air superiority or the ability to fly overseas, fly over Iran uncontested. Right now, what it has is localized air superiority. It has the ability to fly safely over Iran in pockets, in particular areas. It doesn't have it over the entire country. And that's really important as the U.S. is shifting to its next wave of attacks in this campaign, where it's trying to be able to push aircraft forward and use shorter range joint direct attack weapons, which it has in greater numbers than some of these higher end, limited and higher cost long range standoff weapons. So the the U.S. needs to establish air superiority if it wants to make this shift towards moving closer in and using the weapons that it has in greater abundance. That being said, that doesn't mean that the U.S. has unlimited missiles. We've seen in the past, for example, in operations against the Islamic State, where the rate of U.S. airstrikes were so high that they actually ran dangerously low on joint direct attack munitions and almost had to pull some of those missiles from other theaters, including Europe.
Fantastic analysis there, Becca. Thank you so much. Do follow her work. That's Becca Wasser, defence lead for Bloomberg Economics. The European Central Bank says it's more worried about inflation than growth as it assesses the impact of the war in Iran. Governing Council member Joachim Nagel told Bloomberg the impact will depend on how long the conflict goes on for.
It is often like that the duration of the war is the main driver of the inflation outlook, at least on the medium term. So it is, as I said, we see a lot on the energy price front, and now it's the question, how is that maybe spilling over to the rest of the economy? And again, it is pretty much dependent, and you already alluded to it, how is the duration of that war going and how is it maybe evolving over the next couple of weeks?
Coming up, Washington is considering rules that would see it control the sale of AI chips worldwide. More on that Bloomberg scoop next. This is Bloomberg. Now to some corporate news. Lufthansa says it expects a significant earnings improvement this year. Europe's largest aviation group also confirmed it's considering more capacity on routes to Asia and Africa amid growing demand on long-haul routes, highlighting how the war in Iran has upended passenger flows. Anthropic says it will go to court to contest a decision by the Pentagon to declare it a threat to the U.S. supply chain. The move puts Anthropic's $200 million government contract at risk and comes after the company said its AI must not be used for mass surveillance nor autonomous weapons. The Trump administration is considering sweeping new controls over the global AI chip industry. Officials at the U.S. Commerce Department have drafted regulations that would restrict AI chip shipments to anywhere in the world without American approval. Joining me now is Laura Davison, Bloomberg's politics editor and Deputy Washington Bureau Chief. Laura, can you talk us through these proposed controls?
Yeah, so what these rules would do if they are made public, I'll note these are not finalized, have to go through many processes before they would become finalized. But they would essentially put the U.S. Government at the center of exporting any and all chips. So it would, really require government approval for any chip maker to export abroad. The government will be looking for exactly what companies would be using it, what countries they would be going to, and how much and what kind of computing power they're looking for. So for some less advanced chips, for smaller amounts, there would be less oversight. But for bigger shipments for the more advanced technology, that would have the U.S. giving it a little more scrutiny and providing restrictions on exactly how many of a certain powerful chip could go to certain places. And then the U.S. government is also weighing that there would potentially be exemptions for countries or companies that are then investing in the U.S. AI space. So this is kind of fits with that broader Trump strategy that we've seen of they're looking to make deals with other countries and get something for the U.S. in return.
As you say, these are not implemented or anything like that or finalized even yet. But if some of them were to be implemented, what could it mean for the AI industry?
This would really be a whole sea change. The companies, would now have to have the government involved in any transaction they did. There are already some export controls on chips, including the most advanced ones like NVIDIA. But there's a lot of others that don't have to go through quite this level of restriction and scrutiny now. So for some of the chips, that are the bulk of what Intel and Broadcom make, for example, less advanced chips, that would have less scrutiny. However, for those companies, that's a huge portion of their revenue, somewhere close to 70% for both Intel and Broadcom. Some of the more advanced chip makers, NVIDIA in particular, see less of their income coming from abroad, partially because they have those restrictions already. But still, this is a huge portion of chip makers' revenue, and this could really change how the companies are able to make their money. And we've seen that reflected in the share prices today falling on this news.
Bloomberg's politics editor and Washington Deputy Bureau Chief Laura Davison, thank you. Plenty more coming up. This is Bloomberg.
Obviously, you watch oil prices. While the U.S. is no longer a net importer, it's still the case that the price at the pump matters a lot in terms of sentiment, in terms of crowding out other spending. And so I'm just watching prices at the pump. They've jumped up over the last week. You can see that when you drive around. But of course, no one knows whether this is going to be short-term or long-term, and so we'll just see where it goes.
Richmond Fed President Tom Barkin there speaking exclusively to Bloomberg, and let's have a look at what he was talking about. So basically we've had the biggest weekly gain for oil since 2022. Now obviously there was a massive gain, but we're getting very close to that 2022 gain as well. We heard a guest earlier, Livia Gallarati from Energy Aspects, basically saying that sure, the market isn't treating this as much of a crisis as it did the Russia war on Ukraine. That said, it really does depend on duration and the signals that we're getting from policymakers and so on. Also, President Trump coming out and saying, you know, he had reassurances for the market, but so far nobody seems to know how those actions, if he were to take them, would actually work. Let's move on, because as we're seeing this huge gain in oil, we're also seeing a massive gain in the dollar. In fact, it's been the biggest week for the dollar since President Trump was elected back in 2024. A huge gain to the detriment of basically every other currency, right? So the dollar has been a safe haven. It's also been a place where people who have been exiting oil importers have gone. And then let's take a look at jobs, because that's going to be another item on everybody's calendar today. So the market looking for about 55,000 in terms of economist consensus, maybe the whisper number a little lower than that. That's less than half the jobs created the previous month. It is still creation, though, and we have had some good JOLTS data, and initial jobless claims also came in pretty much as expected in the last couple of days. So that's what we're looking for in terms of jobs. And as one of our previous guests said, once the jobs number has come and gone, it'll be right back to what's happening in the war in Iran. So some other risk events for your Friday session. Mark Carney is in Japan. We'll see if he makes any more comments to the effect that Canada would get involved if it needed to defend anybody or itself. The US jobs report, that comes at 1:30 p.m. local time. And then we have ECB speakers Piero Cipollone and Isabel Schnabel today. Coming up, Bloomberg's Michael McKee will be sitting down with the Fed's Austin Goolby for an exclusive interview. That's at 2:30 p.m. London time. And then do stay tuned, because at 8 p.m. London time, Mike will be speaking exclusively with Cleveland Fed President Beth Hammack. That does it for Daybreak Europe. The opening trade is next. This is Bloomberg.